a bizarre situation where some companies are doing very well, and now you can always remember them through these blades of grass, okay? But a lot of other companies are getting crushed because the staff was able to pick up some. I asked them for some weeds. It's like, this place is so well manicured. This is the only weed they can find. So tonight I want to ignore the healthy grass and focus on all the weeds, the stocks of the S&P that aren't working at all. When you focus on the 10 of the worst performers in the S&P 500, well, what do we see? Well, some of it's pretty darn obvious. Remember cruising? Yes, cruise ships, oils, pipelines, retailers, airlines, real estate investment trusts that own office space, and banks. When you think about it, maybe that's not such a big divide between Wall Street and Main Street. After all, Wall Street knows all these industries are in trouble. The real divide is between digitization and everything else. We always get caught up in arguing about whether this is a U-shaped recovery in the economy or a V-shaped recovery or an L-shaped recovery or a W-shaped. Earlier this week, I said we had a fabulous V-shaped recovery in the stock market, but not the economy. Nothing close to that in the economy. That actually made news. After looking at the weeds, though, I think we need to rethink the whole terminology. It's not those letters. No, it's like an entire alphabet of pain. One letter's not enough. See, for instance, if you work or had a job at Norwegian Cruise or Carnival, the two worst performers in the S&P, down 73 and 71%, you aren't feeling a V or a U or even a W-shaped recovery. You're feeling a T economy, straight down after being flat. If you're in Occidental Petroleum, the third worst performer, down 67%, well, you know what you're in? You're in a Y economy, as in why would you be so stupid as to double down and pay a fortune for Anadarko Petroleum right when oil was rolling over? If you own Coty, the beauty brand that's down 66%, or Kohl's down 63%, you're in the M economy, meaning every time you think you're going to go up, you get pushed right back down. And if you work for United Airlines, off 61%, American off 56%, or Delta off 53%, you're in a C economy, bottoming, but you're not going to be able to close that gap anytime soon. Not going to happen. Oh, how about Simon Properties, the biggest owner of mall properties with a stock that's fallen 56%? Well, I call that an X economy. Both lines grounded down because Simon's trying to get out of their deal to double down on Taubman, another mall owner that they decided to acquire before the pandemic. Timing's everything. Finally, there's Wells Fargo, down 56% for the year, where you were hoping and praying we would merely have an L-shaped economy for them, and not something worse. Well, maybe it's a sagging L. Maybe it's someone with really bad handwriting. Once you go through all the decliners, you realize this is a tale of two cities market. It was the best of times. It was the worst of times. It was the spring of hope. It was the winter of despair. We had everything before us. We had nothing before us. The pain from COVID is not totally isolated to small, medium-sized businesses that simply don't trade publicly. There are a lot of larger businesses experiencing their own terrible cycles of pain. The market is full of losers. They're just not big enough to offset the strength in the tech stocks that are making a fortune right now.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.